Welcome to the DDC for euros a dollar. DDC is a way to trade as an investor or trader. And it's also the way you must do it if you're going to play with bigger funds. Because if you're sitting with $100,000, you probably can do the normal, try to find a daily trade and try to trade up and down for the day and so on. But when you come to bigger funds, $200 million or $1,000 million, or whatever it is, right? You can't just sit and play with small time frames and hope that you will be making money, because you will be out of business sooner than you can say hi, right? So then we need to do something else. We need to look at when do market makers, the people or organizations that cause the liquidity in the market, when they enter the market, when they do the setups, and how we can follow that. So important to understand this. And this is a system that I can tell you haven't seen before, simply because I created my version of it. But the CET, or accumulation, distribution, and profit release, is not new, of course. But the way I do it is in a way so you can understand and follow this on your own. And the first thing we must make sure that happens is that a consolidation happens. Consolidation should be a master candle that you see here. And that master candle should have a specific structure, which you see in the manual with these candles. And when that has happened, from this candle, you can expect market to either close outside of the top or downside of the bottom of the master candle. And before we do that, when we have seen this one and we have done the 3 days, we go back, see, okay, this was the 15th of April 2025. So then I go to my SSA database and check, okay, what happened that day? The brokers reported minus 43.04, meaning that there are 43% gap between buy and sell side, more sellers than there are buyers. And as you know, the small traders, the independent traders, are going to lose at the end. That's sadly the truth, but you can of course make money on that. But if you always go with the independent traders, not the big money, at the end the big money always win, because they have much more money, of course. So we know that there are more sellers than buyers. That means that big money is looking for in the future to buy this market, right? But it doesn't mean they will buy it on the day when they report this. As you see, they have been reporting this the entire month, probably months before that, right? That they are going to turn this one. And these high numbers here was something I was following for a long time, until I realized that there must be something else with this data. And to understand SSI data, we need to understand this. When we have brokers that is registered and must report in when they exchange volume in the forex market, there are two ways to do that. The first one is what is known as B booking, meaning they are holding their buy and sell volume like on an internal server. Nothing to report, they're just playing with people's money up and down like an exchange, but they are actually not even placing buy and sell orders into the real market, because they have volume on both sides, and they are big guys. They can play with volume and balance the book and so on without have to actually exchange anything. But then there comes the situation where they need to balance the book. They need to hedge their customers' volume. And when they do that, they go to a liquidity provider, or they have direct market access and so on, and they place that volume in the market. And that volume in the market will reflect in the SSI number. So it's a much more complex system than just look at a number and think, oh, well, I know the direction. That's not how it works. So therefore, we must apply more things to this than just SSI data. But SSI data can give you the highest probability to where price is going to go in the near future. It can take months, weeks, a couple of days. It can be today, you don't know. But if you follow this, you have the safest trade. And therefore, in this situation, you should only be looking for buy trades. Okay. But we are going to discuss this because it's important when you have factors that they give you trades, much more trades than actually the full system. You can trade that as well. So we're going to start to look at this one. What you see here is the previous month high, previous month low, based on where price is right now, not where it was when we were here. So ignore these lines for now. But what we should not ignore is this master candle. They do this to consolidate orders, to put in as many buy and sell orders as possible in the market, to make sure that traders get as confused as possible so they don't know which direction they are going to go, right? As you see, we are coming from a big buy situation here. Traders are selling, or independent traders are selling and selling, think they are found the turning point, which they suck at doing. Sorry for the word, but that's what happens in the markets. That's why so many people lose in this arena. And now you don't have that to do that anymore if you listen and follow this. So what they do, they consolidate the market, and then we have a master candle low here and a master candle high there. We must break one of these sides with a closed daily candle, right? That's step number 2. We have done step number 1, that was here, that was the box. Step number 2 is a break, and you see the first candle that do that is this one, the downside. And the first direction is the right direction. Doesn't mean market will do exactly that, but that's how we should think, right? And this was a buy market. So now it says sell. What does that mean? That means that this data may just continue to fill up to close to 50, which is normally where things start to happen. But just one of them, it can be just data means less, I would say, right? And that's why we need to read charts together with SSI data. So important, right? So in this situation here, as a trained eye, what you will see here is that you do this accumulation here, or what we call contraction, right? As soon as you close outside of this one here, that's called an expansion candle, right? Or distribution candle. Same thing. We're going to call it expansion. This is contraction. This is expansion. As we get the expansion candle, we also get a daily engulf. They are normally very strong. And if you know what you're doing, you can actually trade the expansion candle downwards against SSI data. Because for them to buy, they want to have a discounted price, right? And this is not recommended to start with, but you can be doing this. You don't need to wait for the up and downs before you take the trade. You can trade this with the understanding that this is much more high risk because you are going against what the brokers have reported, but this is a way to do it. So when you close this day here, you will put your stop above this high, and you will try to trade this one down to the next monthly low, or as long as you at least don't get to bullish engulf in the other direction. So you can do that. That's for more advanced traders, but you can do that. And you see from here down to here, there's a lot of selling pips. If you were following SSI strictly, you were buying from this day here, you would have a tough time, right? That's why I say SSI data is an important part, but it's not a signal. It's just information in how you should be doing this. So when we have done the downside, that's the first step. Now we also must break the upside up here, right? And in this situation, we should find a daily engulf for sell down to minimum the opening, or in this case, the close of the master candle. You see exactly what they do. This is something they do over and over again. But if you don't understand the up-down expansions before the actual move, that's where most people lose their money. And if you are managing $200, $300, $500 million, you can sit and do 15-minute charts with engulfs or some system you find on YouTube, of course. You would be out of business pretty fast. what they do here, they place orders in the market to make sure that they can implement as many buy orders as possible when the independent traders are selling. They want price to go down because they only get better and better buy situations that way. So you have to think the intent of the market maker when you're doing this. Here they clearly showed, all right, we are going to take this down now, right? So we risk from here to here. That's our risk, right? And as the market moves down, this was not the previous mount low when we were here. This is for this situation, like I said in the beginning. But we had another here, which I'm not going to mark this one up because this is actually not the clean way to trade this, because you should be following the SSI data if you're new to this. But with experience, and you understand this, you understand the break, and then when the break happens also with an engulf, you can just join the increasing minus number, the increasing independent traders in their MO to whatever level institutions have decided where they're going to turn the market. Right? So when we come down here, we are down this level, and you see all this simple MO up here is mostly a simple MO down to this level. Exactly where they went, right? And this is, of course, things you need to learn, practice, get experience from. And I show you this because you can be doing this. I don't recommend you to do this in the beginning because you are going against the broker's reports, right? But now when we come down here, you see that the market now moving up. Take out this high of this master candle here. It took many weeks to get there. But when you get there and do the next step, and you do the daily engulf, and now when we were here, we also hit a previous mount high. That's bullseye. This is where they actually start the real selling. It was not here. Breakout trades will be joining here and all other systems, as you know. But we move down, we move up, we set the monthly level, we set the daily candle, we can set the stop loss here, start selling here, and follow this down. And the first target is the open of this one, right? But this is just the first opportunity to sell this market. Right? And we were going to buy, right? So what do we do then? We need, of course, to try to locate other situations where it's actually following the SSI data and the system perfectly. So the only thing that you should visually look after is the setup, the box. Because here it happens again. This time, we get the master candle here on the 23rd of May, right? So let us check that one. So we know May is Mount 5. Change that. And this master candle happened 23rd. Minus 44. Not a lot of happened when it comes to SSI reporting, right? Because traders are still short, and especially since they are visually marked as moving down, when institutions are buying, they let volume go down before they take it up. So we are good still to go in the buy direction. And in this situation, you see how we break the high of this one there, right? That's step number one, okay? How far this one will go, you can never know, right? And you don't have a daily engulf here, so you just have to say, okay, I can check off step number one, right? Step number two is to come into minimum down to the open or the close price of this master candle. Best is if it closes below with a body, but that is only required for the first break. That must always be a body above the high of this one. The next entry can be the bottom of this one. And when we come here, this was actually a previous mount low. But when we come down here, you could enter this one. It's not a perfect one, but that's how it works. Up first, then down, and then up, right? Confusing traders as much as possible. Right? So in this situation, if you were buying here up to here, that is your first target. Right? You also have a second target, and that is taking out the last high from this box creation, which is here. And you also have a third target, which is if you're holding this position, going up to a previous monthly level there. That is the key points that they are going to do. Some trades you will just do from the box down to the box up, and then it will go down, take out, sweep this one to take out everyone that was long already, and then they do the real move. That's why we do that as target number one, protect the position. So when you come up here, this candle closing, you will take your first 90%, leave 10% in the market, okay, or whatever you set as numbers. The next step is to go here. If you prefer to take a lower percent here, you can take off some more here. And finally, the best target here is your final target. And while this is up to here, it's risk, because you have your stop loss, negative. When you come up here, your stop loss is no longer negative, because if you enter here, you now to break even. So if you're up here, it never come down here, which is good, right? So every trade that this target and this target is free money or risk-free money, because you no longer have a stop loss that will be negative to you. So you will have less emotions. You will just have the positions on your trading station and leave it there, because you know what you're doing. You have marked this up and you're doing it the right way. And what you see here, this is years of testing, development, tweaking, collecting data to find out this. You can learn about the so-called CT, or the contraction, which is this one, expansion, and trend phase. In many various videos out there, many traders showing them how to do this, but they never show this method, because this is something I've done myself. And the target levels, this one many uses, this one many uses, but this box, I haven't seen people using it. So I try to find a way to make this as simple as possible for you to trade these markets with the safest possible risk. Right? So what have we done now? We have added a third box. Because now we have come, you see, every time we do this contraction box, right? It happens here again. A master candle, they start to do 3 days inside. Why do they do that? Because now they want to confuse you as a small trader or an independent trader. I mean, you can manage a lot of money already, but they manage much more. So we need to see if this is, I would say this is not institutions doing this, or it can be, but this is definitely institutions, because all boxes are checked. They do the master, they do the pattern, they go up first, then down in the SSI direction, and then they move it away, right? And this cannot be done by one lot, euros, dollar. This is done by millions of dollars, of course, right? So we try to identify when big money, institutions, market maker, we can call them whatever we want, the volume that we can't move, but they can. And if we try to join them in their moment, we have the highest probability to actually do good trades. So in this one, what happens? You see my box here, this is the high of the low of this one. We have previous monthly high, previous monthly low, right? So in this situation, what has happened is we went up to the upside. That's the first expansion leg. Now it's created a bearish engulf on this one. While this one was the first expansion leg sell, it was also this one's second leg, because it went down first, right? The second leg perfectly. So this one is fully qualified, but against SSI. But if you're going up first on this one, and you know when you're going up first, you need to go down to this to be an SSI buy. The chances for this one to be right, so it comply with the first signal that was against SSI, is high, right? That's what you need to log. You need to check. You need to understand this, because if you can do this in a proper way, trading in Forex will not be as hard as it is for most people. Very few people know about this. So please listen to it. This is how they move markets. All these candles in between that is just noise. You can find any candlestick formation, any indicator matching and so on, but it doesn't matter if you don't know where are the brokers going, right? What is their intention? What are they going to do? Are they just going to go there? No, they're not. They're moving first up, then down, and then up, to make sure that most traders that are going long here or even short here are in such big losses that they will be very careful entering again. And if they enter pretty much this high here, this move here will put them in zero profit loss. And that's not why you trade, right? So when we come up in here, we can take this, again, expansion leg sell, because we have also a qualified leg here. So this gives this sell a much higher probability. At the same time, when we now are going down, we know that we have passed this one, this master candle here. That was this was the first target. We wait for the daily candle to close like this. This was a very good profit from here to here. We can know our stop loss to break even, which was there, right? And we can just keep the 10% or whatever percent you choose to keep in the market. When you've done that, what was the next target, right? It was if we would have a downside on this one. We don't, because we traded the expansion leg. What we then can do is go back to the first one, say, okay, this one was going down before it was going up, right? So basically down here is a potential next target, but that is exceeding the monthly low. So therefore, I would say this market will most likely hit this one first with some support before it hits there. But it has a high probability to actually go there, because this setup here is actually the one that is qualified for this one to short, because you should actually be buying here, right? And the next time we see a daily engulf on this one, preferably on monthly low, but it can also happen here. And then you just take that risk, because the rewards is much better. So you're not looking to be doing perfect trades every time. Of course, you want to do that, but you are not going to succeed with that, because there are so many market participants in the market. So when you have seen this, how this works, and follow only one system, that's what you're doing all the time. It's the box, it's the expansion legs, it's the entry, and it's away, right? It's not harder than any other system, but this is how volume and markets are made in this industry. And if you're not following this, you're going to have big problems to be a consistent trader in the future, for sure. How about this one? If you were taking this one here, right? Because when you come down here, you must set a buy order, right? You must set your stop here, because you have some understanding on order blocks or whatever, last low and so on. I don't say you should be taking this one, because it didn't follow the manual perfectly. But it was an order in the SSI intended direction. And with all these buy positions here, some of them will probably be released there and so on, right? And this is the game they play. This is how they do it. They come up here, they release the buy orders, right? And now they go down, right? But now they start to be buying here. They're not selling. There are other people doing that. But that's liquidity, buy and sell side, right? So we could say that when this is happening, they are, of course, long, but they're also selling on every, because they have so much money. We don't have that. We can do that. there are always market makers against us, or not against us. We should be happy that they are there, because without them we wouldn't have a market to trade, right? So they are always on the other side, as you know. If you following SSI data, or if you're following COT data, or whatever it is, that's why the COT data, SSI data is never perfect, because they just report what they are doing. They don't say you should be buying or selling, because you don't know where the end is unless you have a system to apply to this, and that's what I'm showing you in this video. Okay, so right now on this one, it's a free risk-free trade, because you would close your first position here. You're 90%, 10% left. You will move your stop loss. So whatever happens here, you're ready to close out your sell, and potentially going in the SSI direction for the next daily engulf, because this has expanded to the upside, now expand to the downside, putting in the daily engulf, and then goes away in the 10 direction. And as no surprise, this is most likely the next previous mount candle, because a previous mount doesn't mean the previous mount, it means a previous mount. It can be 1, 2, 3, 4, 5 mounts away, but you mark them up, all of them, if there are several. In this case, it was only 2 in the near, or not the near future, in the near history, right? But sometimes you will have several of these lines. That's why you mark them up like this, so you know what they are. You can also name them like 1 candle away, 2 candle away, and 3 candles away, and log that. Get the data. Understand the more data you have when you do data-driven candles trading, the more precise you will be, and the less emotions you will have, because you will be working as an institution or market maker by following their footprints, not doing the crazy independent trading world where all money is lost, or I would say all are at the end. Very few people live on Forex as an independent trader. Right? No matter how many charts, how many screenshots they show you, that's not the truth, because they don't understand how real markets works. And like I said in the beginning, this type of setups here is excellent for you who are an investor, or if you have a company that gives advice to investors. Because when you know this, say, oh, buy here. You may buy yourself, or let other people buy certificates for a specific asset. Say, well, I think this is going to go up for the next couple of weeks or months. These boxes will give you investment advice for yourself. And you can also trade them, of course. But this is how big money, big volumes has to be moved in the market. And that's how they must enter positions. They use this down move to buy up. They use this up move to sell down, and so on. But if you understand the game, you will have a better chance to survive. So that was the DDC of Euro Aussie dollar. Hope you enjoyed this video. If you like it, put a like. If you want to subscribe, more videos are coming. Do that, and I'll see you in the next video. Bye for now.